As the summer heat beats down on the storied streets of Frankfurt, the hallowed halls of the European Central Bank find themselves grappling with a litany of risks and uncertainties. The path forward for Europe's economy is shrouded in a haze of political upheaval and inflationary pressures, forcing policymakers to tread cautiously amid the swirling currents of global finance. According to a Bloomberg survey of analysts, the ECB is expected to take a measured approach to lowering interest rates, with the initial quarter-point reduction in June followed by a strategic pause at next week's meeting. The gradual reversal of unprecedented monetary tightening reflects the rising difficulty in assessing the economic pitfalls that lie ahead for the 20-nation Eurozone. Inflation, that specter haunting the dreams of central bankers, remains stubbornly elevated, its persistent strength defying the efforts of policymakers to tame its fiery grip. The recovery from months of stagnation, a glimmer of hope on the horizon, may already be fizzling out, further complicating the calculus for those charged with steering the economic ship. But it is the political upheaval, both near and far, that casts the longest shadow over the ECB's deliberations. Across the Atlantic, the looming specter of November's U.S. presidential election and the threat of another term for the ever-mercurial Donald Trump has analysts ranking it as the biggest danger to the region's economy. Closer to home, the turmoil in France has stirred memories of Europe's sovereign debt crisis, a specter that haunted the continent not so long ago. Faced with such uncertainty, ECB President Christine Lagarde and her colleagues are not pre-committing to a set path for interest rates, instead pledging to make decisions as data arrives. Chief economist Philip Lane is among those who see July's meeting as an opportunity to take stock, to pause and assess the ever-shifting landscape before charting the next course. The markets, ever the fickle mistress, are even more circumspect than the economists, pricing in just one more reduction in the deposit rate this year, with a hint of another to come. There's simply no urgency to continue cutting rates at the current juncture, remarked Karsten Brzeski, ING's head of macro. Therefore, the ECB will finally stick to its data dependency approach and should refrain from giving any forward guidance. The political factors, however, loom large, casting an ever longer shadow over the ECB's deliberations. In the United States, the threat posed by Trump is compounded by confusion over whether he will face President Joe Biden or another Democratic candidate in the electoral arena. At home, the specter of snap French elections has rattled investors, even if the situation has stabilized somewhat since the initial shock. Yet, the vast majority of analysts believe the ECB will not shift course as a result of events in France. Only one of the 29 polled expects officials to tweak their quantitative tightening plans, and just 2 see them tilting remaining reinvestments toward the embattled nation. This is an option for the Eurosystem ahead of any contemplation of the TPI, remarked Dennis Shin, an economist at Scope Ratings, referring to a backstop created in 2022 to counter unwarranted, disorderly market moves as the ECB started to hike rates. Only one respondent believes this program will be activated in the next 3 months. In contrast, a significant number of analysts fret that economic growth could be weaker and inflation stronger than the ECB projected in June. The costs of services, in particular, remain a big concern, driven partly by wage gains that are expected to remain strong. Service sector firms report that supply factors, not a lack of demand, are inhibiting them from increasing output, noted Andrei Skopaniak, senior European economist at Nomura. Hence, still acute labor shortages and resilient services demand risk, keeping service sector inflationary pressures elevated near and medium term. As the ECB convenes next week, Skopaniak reckons the meeting will be uneventful, with the focus shifting to whether the ECB tees up September for another cut. For some analysts, the growing chances of a reduction in U.S. borrowing costs by the Federal Reserve may nudge the ECB's counterparts in Frankfurt to act more rapidly. With Fed rhetoric shifting anew toward interest rate cuts as activity and labor market data appear to normalize from very robust levels, the ECB should put the resumption of cuts back on the table, remarked Ilias Tsirigotakis, an economist at the National Bank of Greece. Yet, amid the clamor of opinions and projections, one fact remains clear. Nobody expects rates to be reduced on Thursday. Incoming data are noisy, and it will be uneasy for the Governing Council to reach a clear view of the extent of the rebound in terms of growth and the underlying trend in inflation, cautioned Sylvain Breuer. All this in an unsettled political landscape in Europe and nervous debt markets. As the ECB grapples with these multifarious challenges, one cannot help but reflect on the words of the ancient Greek philosopher Heraclitus. The only constant in life is change. In the ever-shifting tides of global finance, adaptability and prudence must be the watchwords for those charged with shepherding Europe's economic destiny. The path forward is shrouded in uncertainty, with inflationary pressures, political upheaval, and the specter of economic stagnation all vying for the attention of policymakers. Yet, it is in times such as these that the true mettle of institutions is tested, their resilience and wisdom forged in the crucible of crisis. As the ECB weighs its options, calibrating each move with the utmost care, one can sense the weight of history upon its shoulders. For just as the great cathedrals of Europe stand as enduring testaments to the vision and fortitude of their builders, so too must the ECB stewardship of the Eurozone's economy be a testament to its ability to navigate the treacherous waters of global finance. In the coming months, all eyes will be fixed upon Frankfurt, where the fate of Europe's economic future hangs in the balance. Will the ECB's measured approach prove prudent, or will the currents of change sweep away even the most carefully laid plans? Only time will tell, but one thing is certain. The decisions made within those hallowed halls will reverberate across the continent and beyond, shaping the fortunes of nations and the lives of millions. For in the grand tapestry of human endeavor, the role of economic policymakers is not merely that of technocrats and number crunchers, but rather one of custodians, entrusted with safeguarding the very foundations upon which prosperity is built. And in these uncertain times, it is a responsibility that weighs heavier than ever before.